Hi everyone, and welcome to the Buffett and Beyond Research ETF letter. And boy, are we having a rally this past week. We took our hedges off and we're letting the top stocks rock. November 4th, 2023. And our portfolio, the ETF portfolio, which is a combination of 6 ETFs, are up 10.3% this week. And let's take a look at what the ETFs are doing. And boy, oh boy, things are really looking a lot better than they did last week. And right in here, you can see that we are above the 50-day moving average, which is this blue line. And this is the technology ETF, XLK. And down here, we are getting confirmation from this intermediate term indicator, which has now turned up. So those of you who don't need to be hedged all the time, we've taken our hedges off this past week and we're letting the stocks go by themselves, folks. So yeah, now we're long only on the ETFs for those of you who don't want to be hedged all the time. Now let's look at the semiconductor ETF. Now we had this, what is called a death cross right here, where the 50-day moving average crosses down below the 200-day moving average. 50-day moving average here is the blue line, and the 200-day moving average is the red line. So this indicator up here turned up, this indicator turned down, but boy oh boy, looks like we struck a bottom here, and our intermediate term indicator has turned up. So that means we expect this semiconductor ETF to go up and go through this 50-day moving average as long as this rally continues, which we expect it to do. Now, when we look at the IYT, which is the transportation average, it's one of our favorite averages because we really do well in the hedge section when the IYT moves. The top stocks in the IYT move a lot faster, so we're very happy with this, and it's one of our favorite ETFs since forever. And we can see that it has turned up just like everybody else. We're looking at this death cross here, but we expect it to turn up, and our long intermediate term indicator has turned up. And you can see this line right here. Well, that's kind of a baseline, and when this or any other ETF or stock or index falls this low, we do expect a rally, and we'll see how long this rally lasts, and we think it'll go a while, because if we come back up here, we can see we're only halfway through this rise, and it could go all the way to the top like it did all the way back here. Yeah, that was nice. Very nice, in fact. But we reversed it. We fell all the way down, and now we're ready for a comeback. And I want to show you one thing, because we have two housing ETFs. One is the home construction, and that is the ITB. And then we also have home builders, which is the XHB. And we have noticed recently that the ITB, this blue line, has been performing better than the XHB. Black line is the S&P 500. Now, okay, this amount really doesn't mean that much to us. It means we have two good ETFs, and they are beating the S&P 500, which so many ETFs do not do that. So we were looking at this, but this one seems to be performing better for our hedged portfolios. And then we went back 10 years, and we see that back over 10 years, the XHB, which is this yellowish line, and that is the home builders ETF, performs as well as the S&P 500. But the ITB, which is home construction, does much, much better. Now, of course, in here, in 2022, it fell a lot further, or I should say a lot more, than the S&P 500 and the XHB. But, these stocks are cyclical, because as the economy goes, home building goes. As the economy goes, home construction goes. So we're looking at this and saying, well, maybe now it's time for the ITB, which is again the home construction, to perform better. And so we were right in our shorter term over the past couple of years that the ITB has done well. And then when we look back, and we can see that the ITB seems to do better, also seems to be a bit more volatile. So it's good for the hedged portfolio, and we kind of like that because it has stocks that move very, very well within it, and therefore you can hedge those stocks using the ETF itself. You just go short the ETF and you go long the 5 or 6 or 7 or 8 good top stocks as calculated by the clean surplus methodology. And let's look at the XLU, which is the utilities. And we've been looking at the utilities because we had this move up here, and then it came back down, and then it moved up, and then it started coming back down. This is kind of where we left it last week. It looked like there was a big double top in here. And guess what? Even the utility stocks are moving with this latest rally. And so we are up above the 50-day moving average. So this is kind of nice. Now, all the way back in here, which we can't see, we had a death cross in this index, and now it has come down and finally has given us a nice buy signal in here, which it seems to be holding very well, and it is shooting back up. So I just wanted to bring that up because we've been showing the poor XLU for a while now, because it's supposed to be a defensive ETF, or the whole utility sector is defensive, and we were just showing that it wasn't so defensive this past year or too much last year either. But now all of a sudden it's starting to wake up. And we kind of like that. Finally, we have the XLU. So because a lot of you asked questions about it, and that's why we talk about it. And then we have the healthcare, which was also supposed to be defensive, and we can see it wasn't very defensive as it fell through here. But now it has turned around, moving up nicely, gapped up on Friday. So it's looking pretty good in here. And this bottom indicator here just about to turn up or give us a buy signal in here. So folks, everything is working this week, and boy, when the market rallies. And why has it rallied? Because interest rates have come down quite a bit over the past 4 or 5 days, and the talk is that the Fed is finished raising rates. Now this is speculation, finished raising rates, and by June of 2024, which is only 7-8 months away, that they will start lowering rates. Now that is just speculation out there, but there's good reasons behind that speculation. So healthcare sector is even working along with the XLU. And so, folks, we had a really good week this week. And if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. All right, folks, you go out, have a good weekend, and we'll see you back here next time.